Good afternoon and welcome to CATEX-TV. My name is Chartis Hathaway. The time is now 4:30 in London, 11:30 Eastern and 12:30 in Bermuda. And now for today's news. Lloyd's insurer Marketform has appointed Paul Gurry as the Chief Financial Officer, replacing Roger Doubtfire, who is retiring. Mr. Gurry has over 20 years of financial management experience with a number of insurance firms, having most recently spent 6 years as Financial Director at Aegis London. Prior to this, he was Senior Vice President at ALEA, Financial Manager at Zurich Re, and UK Chief Financial Officer for Chubb Europe. New York headquartered Transatlantic Holdings has confirmed that it has received a takeover bid from National Indemnity Company, part of the Berkshire Hathaway Group, at $52 per share. The offer is subject to formal response by close of business today, and a break fee of $75 million applies should the deal not complete by the end of the year for any reason under TRH's control. The $30.24 billion offered to buy Transatlantic Holdings makes the bidding war for Transatlantic a three-way race. Transatlantic has currently agreed to a merger of equals with Allied World Assurance in a bid worth $2.7 billion. Validus is undertaking a hostile bid for Transatlantic, asking Transatlantic shareholders to ignore the recommendation of the Transatlantic board and stating that its own offer is worth $2.89 billion. American International Group has reported $2.11 billion in net income attributable to AIG for the first 6 months of this year, compared with losses of $873 million during the prior year period in 2010. AIG Chartis Property and Casualty Insurance Unit reported year-to-date operating income of $326 million, compared with $1.83 billion during the first half of last year, although core unit Chartis reported operating income of $789 million for the second quarter. Its first quarter results had been battered by catastrophe losses, resulting in a quarterly operating loss of $463 million due to these catastrophes. Chartis net written premiums for the first 6 months of the year totaled $18.33 billion, an 18.8% increase from the same period in 2010. Chartis US operations generated net written premiums of $9.09 billion during the first 6 months of the year, an increase in 6.6%. International net written premium, however, jumped 33.8% to $9.25 billion during the first half. Chartis' year-to-date combined ratio stood at 111.2%, compared with 102.3% during the same period last year. The combined ratio for the second quarter of this year was 104%, a slight decline from the 102% registered during the second quarter of last year, but a significant improvement over first quarter's 2011's 119%. Asbestos-related claims against Metlife rose 11% in the first half of the year, the company said Friday, mirroring recent comments by other large insurers who have experienced more claims than they expected. Metlife, the largest US life insurer, received 2,306 asbestos-related claims in the first half, up from 2,076 in the same period of 2010, the company said in quarter filing with the US Securities and Exchange Commission. It did not offer details of the potential size of those claims or how those claims compares from previous years. Metlife's new asbestos claims dropped at a steady pace from 2003 to 2010, falling 40% over that period. Metlife has one of the longest and most complicated histories when it comes to asbestos in the insurance industry. Lawsuits have alleged that Metlife employees knew of insulating materials' harmful health effects as early as the 1920s, claims that the company itself has rejected. This year, both American International Group and Hartford Financial Services Group have made substantial additions to their asbestos reserves, given an increase in claims and claim severity. Nearly 1 in 5 claims made on buildings and contents insurance in the UK is for damage caused by escape of water, costing £2 million every day, according to ABI research. Last year, 371,000 escaping water claims were made, with the average claim costing just under £2,000. However, the ABI said some escape of water claims can run into tens of thousands of pounds. The ABI Directors of General Insurance and Health, Nick Starling, said, "This is a real concern. Water is a precious resource and billions of litres are being wasted needlessly. The smallest of leaks can quickly become a torrent and cause some very, very expensive and disruptive damage. Don't overlook or underestimate the warning signs." Aviva Chief Executive Andrew Moss has admitted RSA didn't live up to his ambitions. Moss was financial director when Aviva paid £1.1 billion for the roadside pickup and financial services firm in 2005. Patrick Snowball, the UK chief executive at the time, the bold ambition for the business was to cross-sell home insurance to RAC customers. That proved more difficult than we'd hope at the time, Moss admitted. In its very essence, it is a motoring brand. The cross-selling was not as effective as hoped. Moss, also selling financial crisis, distracted Aviva from the RAC, and when they were not able to give it as much attention as they would liked. Analysts agree that Aviva has got a good price for RAC following the £1 billion sale to private equity firm Carlyle earlier this summer. Carlyle is since reported to be looking to sell a stake in the firm for £200 million. Well, thanks for listening, and Frank Fortunato will be back tomorrow at the same time for the latest insurance and reinsurance news. From all at CATEX-TV, have a great day.